Good afternoon, everybody, and thank you for joining. I hope that we won't disturb your sleep too much, but we'll try to make it as entertaining as possible. A little bit about myself, and thank you for David to introduce. I was head of market data at places like JP Morgan and Goldman's, not at Life, but the London Stock Exchange there, and as New York Stock Exchange as well. Primary focus at the moment, and has been, is supporting the market data licensing, compliance and regulatory activities of clients and those within the industry. And what's very interesting at the moment is, as we've seen with the CEO panel downstairs previously, that this is now a separate topic. So market data, when you talk about multi-asset products and multi-asset classes, you're going to have to fuel those. And that market data has to come from somewhere. So I think, Richard, if you want to introduce yourself, and then we'll just get straight into it.
Hi, everyone. My name is Richard Barden. I work for Cboe, which is an acronym for the Chicago Board Options Exchange. We're one of the largest exchange companies in the world, so we run a number of fully regulated markets, trading a number of different asset classes. So we run the largest options exchange in the world, Cboe, for trading US equity and index options. We run the Chicago Futures Exchange, or the CFE. That's where the VIX index, the fear index you may have heard of, that's where the VIX index future trades, the world's sort of key equity volatility benchmark. We then run a couple of regulated markets for equities. We run a market in the US that used to be called BATS. That's one of the three key US equity markets, along with NYSE and NASDAQ. And then in Europe, we run the largest pan-European equities exchange. Used to be called Chi-X BATS Europe, now called Cboe Europe. And that covers approximately 6,000 equities from across 18 countries. Finally, we own a business that used to be called Hotspot, which some of you may well have heard of, now rebranded as Cboe FX, which is one of the world's top 3 FX ECNs. And then finally, off the back of our equities business, we've created a number of indexes, specifically in Europe, which track all our own market data. And my role is, as part of the market data team here in EMEA, we're just over the road actually, in Monument, is to help commercialize our market data products, and obviously talk to all of you to understand what other market data products or issues we can help address.
Thank you very much. First question really is, in law, nobody owns a fact. Why should we have to pay for market data? Explain the rationale, explain the licensing. What is it that we're paying for? Because these are just numbers.
Yes, I mean, certainly from a layman's perspective, that's a pretty good position to start with. However, once you delve into that subject, it's not quite so simple. First and foremost, the exchanges, through various agreements they have and through the participation of their members, are in effect the platform for both the price formation and dissemination of the data. Without the exchange, the market data wouldn't simply exist. And it certainly wouldn't exist in a form that is easily consumable by all of you, and that is properly licensed and regulated, and is also fairly and transparently priced and regulated. So that's the first point about the exchange. And what that means is, in effect, the market data that's generated off the exchange through the agreement we have with our member firms is our intellectual property. So in effect, a market data license that you would buy from an exchange is in effect a license for you to use their intellectual property. The second point is a more meaningful one, I guess, if you like, or a more tangible one, which is there is a high cost to the production of the data. Cboe is heavily regulated in a number of areas. To give an example, our European equities business is regulated both by the FCA here in London and by the AFM in Amsterdam, as we run 2 equity exchanges here in London and Amsterdam. It's a very high cost to that regulation. In addition, in order to run a well-run market, we have a number of very experienced and capable personnel working across those various compliance and market surveillance departments. Again, there is a high cost to that. And the final point is that, like banks and brokers, who obviously monetize the data services they generate, the foreign exchange data that a lot of you may well consume. Exchanges are entitled to monetize the data that they generate as a byproduct from the trading on the exchange, and that's exactly what happens with the market data.
Thank you. I mean, just to put this a little bit of perspective here. So, that there are people in the audience I know, and clients and friends. So, one of the questions I'm often asked is, how much does this all cost? How much do all these exchanges cost? What are the policies? And we did a study earlier this year where if you were going to take the top 5 to 7 exchanges, if you are people like, for example, an equity, or you were smaller or larger, people like that, what would it cost? And what are the costs of licensing and the policies and reporting and redistribution, and what can we do with it? On average, it costs £657,000 for your base license fees. That is not including redistribution to other B2B clients, let alone the retail side. And each exchange, and we're going to talk about this as well, specific to Cboe, each exchange has its own policies and has its own way of charging as well. So leading to that, could you explain, Rich, about how you've created and innovated within the CFD industry specifically, because you've created some policies that have been quite groundbreaking and also quite generous there. So please give us a bit more detail.
Okay. So that kind of harks back, I guess, to the beginnings of certainly on our equities business in the US, when a company called BATS was formed, which stood for the Better Alternative Trading System. And BATS was basically set up as a competitor exchange in the mid-noughties to NYSE and NASDAQ, and it felt that through the application of technology, it could provide a more efficient and more disruptive exchange. That also applied to the market data. We've translated that across into Europe. So to give you an example, echoing what Rafah was saying, if you wanted to go out and buy the redistribution licenses from all of the primary European equity markets in order to facilitate your business, for instance, you wanted to make prices on the components of the Euro Stoxx 600 index, for instance, you're looking at a cost of somewhere in the region of £220,000 a year. That's just the license fees, let alone the end user fees. Plus, there's all of the administration that goes with that. Cboe Europe have tried to sort of disrupt that and come up with a more user-friendly way of creating and pricing market data. So we have a single market data license that covers all of Europe. So we trade 6,000 stocks, all of the well-known retail stocks, and ETFs. So it's a single license, covers 18 markets. But more importantly, the price is a small fraction of what it would cost to buy the same data from the other European exchanges. So our services cost less than £20,000 a year in that regard. So that's one of the ways in which, so from a pure financial point of view, we tried to create policies that are friendly towards the brokerage community and certainly affordable as well.
Thank you. On the point of policies, so just to explain to those that want to know, anything that an exchange defines as policy will be based on the utilization of the data. So how do you use it? Do you redistribute it? Is it internal? And one of the things that certainly the CFD industry licenses is derived data. So it's the right to receive real-time data in its raw format, and then you will apply your own IP, derive a new price, and then you will be able to redistribute that as your own house price to your end users, be they retail or further down the chain of B2Bs. So on that note, could you perhaps detail a bit more about the policies that you think are very specific and benefit and provide advantages to our audience here, please?
Sure. Just one minor point. In the old days, I think it was okay for firms just to apply a spread and put out, this is my derived price. we're no different now. Most exchanges will want you to be able to not reverse engineer the raw price from the derived price. So simply adding a spread is going to be tricky. There needs to be some unique element. I know a number of firms create their own fair value price. They add that into the algorithm. They then put that out, and that then makes the price, something that you can't then re-engineer from that derived price. In terms of the policies and how we've tried to help the CFD industry, obviously we talked about the fact that first and foremost, if we look at our European equities business again, we're hopefully simple to engage with. We have one policy, covers a lot of countries, has a low entry price, and we don't charge, for instance, any end user fees for retail clients. So again, important points to consider when you're looking at this sort of question. In terms of other areas where we've helped the industry, we've harmonized our sort of policies, and a lot of that has been based on client feedback. Cboe Europe and BATS US, as the businesses were in the US, was built up basically on client feedback. That's how BATS came about in the US. And that's how we've developed our business here in Europe. So we're very keen to talk to all of you. I know quite often when some clients hear the words exchanges, they run for the hills. Hopefully that shouldn't be the case here. We can have a grown-up conversation with you, try and understand what it is that you need the market data for, and try and help advise you as the best way that we can as to how you can work with us. And in terms of policies, we have harmonized policies across the Atlantic. So we now have a set of common derived data policies spread across both white labels and APIs. So again, simplifying how you would sort of interact with the exchange and how you could best monetize our data within your products.
Great, thank you. I mean, one of the things that we must bring up is, and it may be applicable to a number of people thinking about this, really is what happens if I'm a client, I've been receiving data from a liquidity provider or liquidity providers over a short or long period of time. I haven't been declaring, I haven't been paying, and I speak, by the way, because I was the head auditor in the industry. I've conducted over 200 audits of banks and financial institutions. So, these things happen every day, and we've been, as Mo Rasul downstairs said, and the CEO, he's been involved in some mega audits, that I've handled for them. So what happens is this. So usually get an email from the exchange who will ask you to explain where your supply is coming from. You can't do that or are unwilling to do that. What then happens, it then goes out to all of the LPs. They ask about you. They will try and open dummy accounts. So a good auditor will open a dummy account. They will call up your support lines and ask about where the data, the provenance is. All of these are the tricks of the trade, so to speak. But the question to you, Richard, is how do you handle the non-compliant people who come to you, or those that you find out about? What are the steps you take, and what's the guidance, not the advice, on this?
Well, I've just learned a few tricks from you, so thank you, Rafa. Are you paying attention, Stephen?
Stephen was nodding there. So.
Yeah, there'll be a bill after this, I'm sure. Joking aside, so the world of auditing to us as a newer exchange is new. We have only been conducting client audits in Europe over the course of the last 18 months. Some exchanges, bigger, more experienced, see audits and the fines from audits specifically as a revenue source, and it will be a line item somewhere within some of those exchanges' sales books. From our perspective, echoing what we were talking about earlier, it really just starts with a conversation. Trying to understand what's been going on, why, for how long. We don't employ people who are going to ring up and get a dummy account at a broker's. Well, certainly not yet. We don't have those sorts of tricks of the trade. So we are maybe slightly different in the sense that we would rather engage with you and have a conversation to understand what's been going on, why, and then work with you on mitigating that. That's not to say that we won't be asking for some form of money for the unlicensed use of our intellectual property. But, as I said, it comes back to start with a conversation and then understanding, the full context of what's been happening, and then working with you on hopefully a fair and reasonable settlement and solution going forward.
Thank you. I want us to open it out to the industry. And by the way, does anybody have any questions at the moment? Please don't be shy to ask, or do approach Richard or I afterwards. This is a group conversation, so please do contribute as you see fit. But open it up in terms of the industry rather than the Cboe specific part, which is, if we take and we look around, the big CFD sort of data exchanges are obviously Deutsche Börse, CME. One of the ways that the CME has innovated in the last year, and Deutsche Börse, is that allowing a B2B client to redistribute to another B2B client, which was not possible only a year ago. It is now possible through licensing channels there. Could you explain, in terms of how you see outside of Cboe, what innovations or changes you would like? Harmonization, is it definitions, licensing? Should we be charging across the board the same thing? Should we be approaching licensing as a template so everybody has the same sort of a unionized or a utility? What's your opinion?
It's a very good question. I mean, and it's one that gets asked a lot within the market data specific industry, which is, can we have some form of common agreements, common definitions, templates, as you were suggesting? And yes, there is some sort of movement towards that. Certainly common definitions maybe of client types among exchanges would be useful. Part of the problem is that, like yourselves and your competitors, obviously some exchanges compete with each other for business. Therefore, some will try to innovate in that regard in order to get a leap on the competition. It's also difficult as well working within a heavily regulated environment in terms of what you can and can't innovate with. We have a number of different regulators. As I mentioned, FCA and AFM here in Europe. We have the SEC in the States. For those of you who aren't familiar, the US equity exchanges and the SEC are currently at loggerheads over the perceived cost of market data in the States, and also some of the proposed market structure changes that the SEC want to introduce. So we're in a rather unique position where Cboe, NYSE, and NASDAQ currently have litigation outstanding against its regulator. So quite a strange environment for us to trying to innovate on the market data side. I'm not sure whether that answers the question for you.
I'd like to open up to our good audience if anybody would like to make a comment or have any questions. No? Stunned silence? No? Okay. Everything is clear to you all because there'll be a test after this. So I'd like to ask you a question, which is, show of hands really, is that how many of you perceive the cost of market data licensing to be a major factor in your businesses, i.e. it is in the top 3 or 5 of your cost base? None of you. You could charge more. Okay, so that's okay. Nigel, you can send out notices. So that's okay. And another question for you is that, do you have a clear understanding of the policies, the permitted usage? Is it something that is difficult to understand, or is it easy to understand? Who thinks it's difficult to understand? Yes. Okay. And anybody thinks that they're easy to understand, in which case come and take the microphone off me. No? Okay. All right. No, that's I get that. I mean, sort of my final question to you is more about how sustainable is it in terms of you are one exchange group, of course. And then there are the London Stock Exchange Group. You have NASDAQ and NYSE and ASX and JSE and CME, and it goes on and on and on. But there will reach a point, and it has, I think, in some respects now, where it's my belief that some clients, some companies will not be able to join the market because of the costs of market data. And that's a reality today. Or it is unsustainable to continue to innovate through products, multi-assets and things like that. What do you think could be a solution? Is it to create a consolidated feed, for example, as we have in the US, under the guise of the CTA, so a regulated data feed? So just to explain, the CTA is the Consolidated Tape Association in the US, because market data is fully regulated in the United States. And so every time, when I used to run New York Stock Exchange, every time I wanted to increase a charge, I had to make a filing at the SEC in New York, and it would be open for 90 days.
Still is 90.
90 days, and of which, I would get, the living heck kicked out of me by all and sundry there. And it was anything over 10 cents that had to be filed. And so what they did was, in 1972, they created a consolidated tape, which was the regulator's way of saying, we have to make this uniform and available to all. There has been much talk about this and attempts in Europe, as you know, but what's your opinion on the industry-wide rather than your specific exchange? Would you support such a thing?
Conceptually, yes. But concepts and practicality can sometimes diverge. Certainly, for some of you who may not be aware, ESMA, which is like the regulator's regulator here in Europe, ESMA has put out, I think it's a white paper or a working party, one of the two, to look at the feasibility of creating a consolidated tape for European equity pricing. This has been under discussion before, so whether this will actually produce something material this time, I don't know. Whether it will have a significant benefit for the industry here, again, I'm not so sure. ESMA's primary view, I think, is based on requests from the buy side, so the institutional asset management industry within Europe, to try and have a consolidated tape. They feel that the fragmentation of equity markets in Europe over the course of the last 10, 15 years for an institution has made it difficult for them to be certain that they have an entire view of all of the market for pricing in certain instruments. Back to your other point as well about sort of what's happening in terms of the rise in prices and also the proliferation of new products and new prices that exchanges are generating. That's a tricky one. Exchanges' trading revenues have generally been in decline over the last 10, 15 years. So for a lot of exchanges, they have viewed data as a way to offset that fall in revenue. That's why you've seen increase in prices and an increase in the number of products and the uses that exchanges now charge for. I don't see that going away. It may well be, though, that for certain kinds of data use and amongst certain clients, that they have indeed reached an inflection point, and that they will now start to look at other ways to address this issue, whether it be through actual firm consolidation. I know that's driven one or two mergers in this industry recently, or whether they look to pare back on the products that they trade. I don't know, but as I said, I don't see exchanges failing to increase their costs of market data or the products that they charge market data for, because it's such a critical source of revenue to them. I hope we are not tarnished necessarily with the same brush. As I mentioned, we've kind of come in as a newer exchange over the course of the last decade, and we hope some retail-friendly and disruptive policies, which will allow firms to mitigate the high cost of buying market data from other exchanges, other sources. But it is, yes, it's a topic that I don't think will go away over the course of the next 5 years, I'm sorry to say.
Thank you. I just want to wrap up and give you some figures. So far this year, so let me give you some historical figures. So 3 years ago, there were 2 audits in the CFD spread bet FX industry by exchanges. That was in 2017. In 2018, that went up to 6. So far this year, I've been personally involved in 18 of them. The average settlement, not the finding, the average settlement, i.e. money paid from one party to the exchange or the source, has been $1.2 million. So that's one thing. The second thing is that the cost of market data is rising because exchanges are bringing out new policies, but also more data. And more markets and more assets. And
Indeed.
they're slicing and dicing how that data can be earned from. And one of the things, if anybody's interested, and I'll email it, is I put together 2 slides that show how a single point of market data goes through the entire financial system and how much it's used and how much it earns for different parts of the system. So those are very important figures as well. But just to conclude, please come and talk to us about market data. Come and talk to me. Come and talk to the exchanges here. It is not like it was in the old days, when Richard was still at school and I was working, sort of thing. Take that. That's
The reverse, I think, sadly, Rafah.
It is now no longer a risk to talk to them. It's actually very pragmatic to do that. I have sort of, more than a dozen clients in the CFD industry, and overall more than 24 clients in the financial industry. And I see a sea change in that integration is more important than being siloed. So in your market data. So do come and talk to us. It costs nothing. And if you have any questions, please do ask. But I want to say thank you very much to Richard.
Thank you.
Thank you very much to our very good friends at Finance Magnets. And we'll take any questions that are easy, please. Oh, Dennis.
Yes,
my
hi,
friend
Rafah.
of 20 years.
I'm not quite sure whether it's going to be an easy question, but first of all, thank you, Richard, and that was very brilliant to learn the usages of the market data. But my question is regarding there are some websites, before going to brokers, everyone in this room, I guess, knows that there are a couple of websites which provide derived data, CFD data, for free to millions of users. So what do you think? Because the people having this kind of websites with free data, people think that data is not something, a commodity they should pay for. So how do you explain this? Do you think it would be the first priority is to audit the brokers, or in my point of view, would it be right to audit this kind of websites to protect intellectual property of the exchanges? Thank you.
I'll defer to Rafah on this one.
As sort of an ex-market data audit, as you know, and sorry about that, 18 years ago. So there are three points, and you make a very good point. So innovation today has moved on. The use of technology is absolutely important. We have issues which we never discussed before, such as latency, infrastructure. These are very important points. For the retail market, the exchanges have come up, a lot of them, but not all, with policies that have been built one on top of the other. It is only in recent times that people like TradingView, who are enormous and provide real-time data on an open access website, but it's derived. And as you said correctly there, it's not a raw real-time, otherwise they couldn't afford it there. And what the model there is that they take this derived data from people like, for example, a trade tech, there, and it's a derived, irreversible, as you've said. It cannot be reverse engineered to the original. And then what they've done is they've taken a license from the exchange or umbrellaed underneath whoever they've got it from, who have a license to do that, and then password protected it or provided a teaser on a real-time delayed derived basis. So you see the ticker changing, but actually it's a derived price for 15 minutes delayed. So the perception is not always the reality. For those, and I'm involved in a large project at the moment, where you have the biggest website in the world with 11 million retail users who are going around not paying for their market data. And so the exchanges have gone to them and started to shut down the sources of that data. So the exchanges they're very aware of these things these days. There's no more slow moving. There's no more waiting for a month before you reply to an email. They will send out an alert to everybody and saying you are not permitted, you're embargoed contractually to provide data to this company or any of its branches or any of its brands, because in that industry it's not just the company, it's the branding. So a lot of work is being done on that, and it's very unfair to people like you who pay your license fees for those that don't. So thank you for the question. I think we're out of time. The good lady at the back is sort of smiling menacingly at me. So I think we'll leave it there. Thank you very much, Rich. Thank you all very much as well.
Thank you very much. We're on stand D3, so do come and say hello.